regulations? What this matters to US and China competition? How my prediction comes true? What about the rest? On 26 December 2021, I wrote an article on US versus China competition. Now, how is China fighting back? Well, recently, China announced that it is not against the VIE structure. What's VIE? VIE is the variable interest entity structure that the non-Chinese media have been saying that China, CSRC, is intended to ban it. Here, I extracted the real news, official news from CSRC. So, what does it mean? Don't just read news on surface. You have to think through and see what the intention of certain news. The fourth point here emphasizes on the merger of capital markets liberalizations and support the development of corporations, particularly in the ESOP situation. Here is the credible source. Me, isn't it? No, China will not only focus on internal capital, China will continue to utilize external capital. The current regulations intentions are for development, and corporations are free to list overseas via VIE structure. I believe you have been reading news that investors continue to pour money into Chinese startup and Chinese tech stock despite regulatory crackdown. It's as recent as in October, November, and even December 2021. And such investments with particular interest from Asia, where Asia-based investors remain most interested in China as compared to those in Europe or North American, according to preaching data. But this doesn't mean Asian investors want to lose money or get their capital tied up indefinitely. As you know, Hang Seng Tech Index has been down by more than 50% for all-time peak. I have repeatedly wrote that confidence once lost is very difficult to be recovered. And as recent as on 20 December, I emphasized this point, and I'm very fortunate to be right ahead of the PBOC and CSRC in recognizing this, which also explained that they have on 24th December, 25th December, announced the market favorable news that is that VIE structure is not going to be banned. And what's more, there's so much immense pressure on the tech stocks where we see a lot of companies like Kuaishou Tech, iQIYI, Mengkujie, all laying off workers and employees. And this is not good for China. Just look at the share price performance of Kuaishou Tech, Baidu, iQIYI, and Mengku, and you will see what I have been talking about. Plus, the news media have been circulating this news, which I believe you are well aware that China 3Q 2021 GDP growth slows to 4.9%. But the short sellers can continue to capitalize on what? The signs that global investors are cutting back on emerging market funds continue to add downward pressure. What the Chinese authorities do not want, you will see from my previous video, that is for the short sellers to continue biting on the tech regulations to short sell Chinese tech stocks and Chinese stocks in general. You see the Hang Seng Index have fallen very badly. The short sellers, of course, also bite on Evergrande debt crisis and China property market outlook, saying that Evergrande as well as Kaisa, all these property developers can drag down the entire China's economy. And the recent 3Q 2021 GDP growth at 4.9%, falling below the critical point of 5% GDP growth level, is also a biting point which short sellers continue to bite on. But in a recent PBOC meeting, PBOC highlighted they are well aware of the economic situation and had on 25th December 2021 mentioned that COVID situation is still developing and external environment is still very uncertain. Plus, internal domestic demand is weak and there's potential for supply destruction. So they have on recent meetings specifically mentioned that they aim to reduce corporate funding costs, have RMB to float within a reasonable band, as well as encourage financial innovation. And here's what Ministry of Finance from China has said on 27 December. They will continue to support the economy, including helping the small, medium enterprises through the difficult times. The main points mentioned here is that it will revolve around controlling the risk in the market, in the economy, and helping domestic economy to unleash internal demand, develop better auditing process, and in this way, strengthen the regulatory and supervision and monitoring oversight. And one very important point pertains to the development of the agriculture industry. It is also consistent with China's Xi Jinping focus on food security. In the state media, they mentioned that the 开放的大门会越来越开越大. But we all know that if short sellers cannot succeed on China regulatory changes, they will continue to rely on US measures, if any, against China to continue to short sell Chinese tech stocks. What is important right now, if any one of us want to invest in Chinese tech stocks and Chinese stocks, listed in US or in China, is having a good rate of geopolitical relationship between US, China, and the European countries, and see how US and Europe negotiate with China, then deciding our price point that each of us with our own risk reward profile decide when to enter or to leave an investment or trade. For me, after seeing this recent news from China, I continue to be allocating my capital on portfolio management basis, but from today onward, I'll be more aggressive to acquire Tiger Broker shares.
As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.